Here we have the current stock market update for Super Micro Computer Incorporated, stock ticker SMCI. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So here we pulled out to the daily price chart here because I thought that it would be important to sort of get a broader sense of where things currently stand for this stock. As we know, this stock has been under a tremendous amount of selling pressure in recent trading sessions. However, these declines are really longer term in nature. We've really seen a significant amount of downside price movement ever since the price highs at 12.29 were posted during the March 8 trading session. So since then, we have seen two successive waves of major downside price movement. So, this isn't really a new development for the stock. What we really did see was a tremendous amount of upside price movement that occurred quite quickly. Share prices moved heavily into overbought territory here. We're actually seeing some fairly unbelievable readings. If you look at the daily price chart and you look at the relative strength index here, uh, these overbought signals here are tremendously high. You really don't see this occur very often. So essentially what we're looking at here is an RSI value that's above 97. So just a quick primer here, anything above the 70 level would be considered to be overbought. Anything above the 90 level would be considered extremely overbought. Here we're trading above 97 on the daily chart. So this is a significant movement higher. And it's the type of price movement that would generally not be considered to be sustainable. Share prices eventually need to work back toward their longer term moving averages. You need to revert to the mean. You can't deviate so far away from the moving averages for a long period of time. And this is ultimately what happened here. You don't see share prices move into the 97 level very often in these indicator readings. And we actually stayed in overbought territory for quite a while. We were actually looking at overbought territory roughly in the middle of January, and this extended all the way to the middle of February. So we were in overbought territory here for a full month, essentially, which is a very long period of time. So, it does need to remain obvious here that share prices did take a tremendous run higher, and it does stand to reason that possibly this move was excessive. I mean, the market certainly seems to think so, because we did see some fairly significant price movements. So, we do need to sort of take an assessment here of how these waves unfolded. So, currently, we saw rallies from roughly $300 per share to 12.29, and then a movement lower all the way to roughly 671. So as we can see here, share prices failed to retest those prior highs. The successive high, the next high in line here came in at $1,014, and now we're posting new lows at $395. But even before this news, I mean, the $395 low is really the result of this recent accounting manipulation accusation piece by Hindenburg. But even prior to that, we were seeing new lows in the stock. So what you're seeing is now a series of lower highs and lower lows. So just in fairly basic terms, that is, the initiation of a downtrend after a very significant run higher. So the real question that investors need to be asking themselves is, which move is valid here, which move is sustainable? When you start to see tremendous runs higher like this and then a major reversal quite quickly, you really have to call into question the validity of the original price move. So that's the real question here. Was this price move, this initial price move, was that the real move, or was the successive move lower the real move? So, these are real questions that need to be answered. So in addition to this, if we're going to look at the most recent trend wave here, typically when I'm looking at these things, the most recent trend wave tends to be the most influential price wave. So if we're looking at the most recent price high coming in at 1014, we can extend this to 395. And we can see that there were some small price movements here to the top side. So we'll sort of move down to the lower term time frames here. We'll look at the 4-hour price chart to get a sense of how. Maybe we should go even lower than this. Let's go to the 2-hour price chart. Okay, how about the 1-hour price chart? What we're trying to do here is look at the size of this latest rally. So, we essentially have this negative information from Hindenburg and that's this major, spike low. We have a price gap here, and then a spike low. So from there, prices have managed to bounce a bit. We are seeing a bit of a relief rally here, I suppose you can call it. But the size of this, what I'm trying to point out here is the fact that the size of this quote unquote relief rally is still quite small in comparison to the prior declines that occurred. You could suggest that this is a buying opportunity, that share prices are at a discount. There's this tremendous potential for upside, given the fact that share prices recently saw highs of 12.29, or at least 10.14 would be the near term high. But when we look at the size of this relief rally, this is what I start to call into question here. So anybody that's suggesting that we should see a bounce here and that dips should be bought, the first thing that I would point to here would be the fact that the size of this movement higher has been incredibly small. We've already started to see selling pressure here. So overall, this just looks incredibly weak to me from a technical perspective. I mean, just from the chart analysis itself. I mean, this does not mean that share prices can't recover here. Maybe the Hindenburg report becomes discredited. Maybe we get a bit more clarification about what exactly what information was being hidden from investors and how significant that information really is. Maybe it's not as important as Hindenburg would like the market to believe. Hindenburg is a short seller. This is what they do. They don't buy stocks; they sell stocks. So it is their job to identify situations that would, stock situations where the stock is going to crash, just like the Hindenburg crashed. So, it's not, it is their job to point out situations like this. So you could make the argument that, a lot of this information will ultimately be discredited. There's a lot of potential room to the top side. We don't see any major, significant resistance zones coming in here until roughly $630. This is a price level that I pointed out previously. This was even before the Hindenburg report was released. The 630 level was being watched here. So, what I would point to from a chart perspective here would be the fact that the size of this quote unquote relief rally, has been quite small. So to me, this chart still looks extremely heavy. And then in addition to that, you also have this share price still trading below all of the exponential moving averages. This declining purple line here would be the 20-hour exponential moving average. And as we can see here, share prices ran right into that level and started to decline lower. Overall, the amount of selling pressure and the amount of negative momentum that is still being directed at this stock is quite extreme. The indicator reading is starting to bounce out of oversold territory, so that is a little bit of a positive here. Share prices, the price movements on this stock are just incredible. On the hourly time frame, we saw oversold conditions. Before we were talking about overbought conditions. Here we're talking about oversold conditions at roughly 7.5. Which is another extreme reading. Anything below 30 is oversold. Anything below 10 would be considered extremely oversold. And here we entered into regions of roughly 7.5. So these are just extreme volatile price movements here. But if we were really going to see a major relief rally here, I would expect to see a bit of a movement, a better movement here to the top side, probably a break above these exponential moving averages. And we really didn't see that for this stock. So at the moment, I'm still expecting this stock to trade quite heavy. I am expecting to see a reversal higher in tech, in the tech sector, but it's not really showing itself at the moment on this price chart. So here's the current market update for Super Micro Computer Incorporated, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.